Welcome to Bears in Exile. Today is August 4th, and it is time for the market overview. We'll be looking at everything we look at every single night. Alright, well, terrible day in the market. Completely not what we were looking for. Um, and, last night it was looking decent. In the futures in Asia, um, news was good. And when Europe opened, Europe was up big. And then shortly after that, it ran into all kinds of trouble. The trouble persisted until the markets opened here, along with the jobs data, which we were looking for. And it wasn't bad. It just wasn't. It wasn't much of anything really. So we ended up having this nasty red bar, and there's no ifs, ands, or buts about it. This is, a continuation candlestick, 4.3%, 512 points, 13 if you round up. And what do we have to work with? Well, overly not too much tonight, unfortunately. Of course, we have the short-term moving averages. Look at that, just sick separation. I mean, they're just pulling away completely from itself, and disgusting. CCI very low. RSI 14-day moving average still sliding down. It still has room. I was expecting move up on the stochastic and just give us some sort of limited pop before the RSI drag it down more, but no, that didn't happen. RSI itself, really low, really low. And of course, MACD histogram ticking down. Beyond that, what do we have? Daily divergence on stochastic, if it turns up. 60-minute. What is left after this today? Well, CCI, we still have divergence. We don't have one on the RSI. I'm sorry, the stochastic. We still have one on the RSI. We do not. The MACD histogram one was taken out today. It's unfortunate. So we did lose one. And the overall picture is pretty darn grim. Do you get some kind of a dead cat bounce after a 4% move plus today? We have to get one at some point. Maybe it won't be today or tomorrow. I mean, this is a continuation candle. Who knows? SPX. Everything that was said about the Dow applies to the SPX. Big continuation candle. Short-term moving average is disgusting. That is as ugly as it gets. And beyond that, 14-day RSI moving average ticking down along with everything else. Going into the 60-minute time frame, what divergences are left? CCI divergence, not stochastic divergence. We still have a very mild RSI divergence, and the histogram divergence, it is it's right almost gone. There is a tiny hair left, but if there's any follow through whatsoever tomorrow, then that'll be gone as well. Very disappointing. This time the VIX actually did perfectly confirm our major indexes. And, what is there to say? On the daily, could we have possible negative divergence on CCI? Yes. On the stochastic? Yes. On the RSI? Nope. On the MACD histogram? Nope. Everything ticking up, of course. On the 60-minute, do we have any divergence? CCI? Longer term, yes. Stochastic, nope. that was destroyed today. RSI, nope, that was destroyed today as well. And on the histogram, yeah, that was pretty well destroyed today as well. So we've had many divergences just crushed today. Oil. I always talk about how when oil is bullish, the market is bullish, and perfectly, oil down huge, and market down huge. CCI money flow just gone. We still have lots of room on the 14-day RSI moving average. This is the one thing that really troubles me on all the major indexes. And I really thought we would have some sort of a move up in the stochastic while this continued down, giving us a small boost of some sort. But no, RSI massively low. Of course, stochastic stochastic, yeah, ticking down. Histogram and MACD ticking down. There isn't going to be really anything looking up today. TNA almost down 20%. Incredible. Incredible. There's nothing to add that hasn't been said for the major indexes. Possible divergence on the daily with the CCI, with the stochastic. 14 days still clicking down, but notice it has gone farther than the Dow and the SPX. Not one on RSI or the histogram, of course, but we do have CCI and stochastic. Very interesting. Of course, those can be destroyed, but 60-minute CCI divergence. Not stochastic, that was eliminated today. RSI, yes. And MACD histogram, yes. So at least TNA has that going for it. It's a lot, it's more than some now. Currencies, yeah. Huge gap on the dollar. And so, at the very least, this at least suggests that we're having correlation re-enter with the dollar goes up, the market goes down. So it's a big gap and a big move up. CCI very high, stochastic very high. Notice the 14-day RSI moving average totally neutral. RSI itself getting up to 50, neutral. We do have a bullish cross, and the histogram is ticking up. So maybe at least we will have this sort itself out, and we can help gauge what the market is doing as this one is repairing its correlation. FXE, yep, perfect inverse of UUP. CCI ticking down, stochastic ticking down, RSI 14-day moving average barely ticking down, RSI itself getting also to the 50, bearish cross, histogram ticking down. Now here's something interesting. GLD, our second VIX, big down, bearish engulfing. We do not have a downtick. CCI ticking down, stochastic ticking down, 14-day RSI moving average getting high but not rolling over. RSI itself getting below the 70. Looks like MACD is about to roll over, downtick on the histogram. So, if gold were to crap out here, then perhaps the VIX will follow suit. Perhaps it won't. Perhaps this is just too high. We don't know. SLV. Ugh. Disgusting. Absolutely disgusting. Massive bearish engulfing this whole little range we had. That's just gross. CCI massive down, stochastic ticking down, RSI 14-day moving average rolling over, which is pretty crazy for a one-day move, but yep. RSI itself getting below the 50, and histogram neutral, and MACD neutral. Ugly. So I would love to say that tomorrow we're going to get dead cat bounce. We're going to get a move of some sort to the upside. We just don't know. And this continuation candle is just ugly. But good luck to everybody. This is just brutal. Just brutal. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.